Assalamu alaikum, everyone. Welcome to the Sharia Scholars podcast. As you're well aware, this is the podcast where we discuss all those difficult questions in Islamic finance, which typically you don't get an answer to, or if you do get an answer, it's never so straightforward or it's never comprehensive. And so this series actually goes into those questions with the experts in the field, the Sharia scholars and practitioners, and understanding the reality, what's actually happening, why it's happening, and what does the Sharia really say with evidence. It's not just opinions. And this is the focus of this particular podcast. Now, today's session, I'm really honored and happy to have two people who I really look up to in the Islamic finance industry, who have almost 2 decades each of experience in the Islamic finance industry, talking about a topic which I always read on social media. Almost every week, somebody is speaking about this. What's the question? Is why do Islamic banks use interest rates or the base rate when it comes to pricing or referencing or benchmarking? That's what we're here to address today. So with me, I have none other than, I would say, perhaps one of the earliest practitioners in the UK and scholars, Dr. Shaher Abbas. MashaAllah, Dr. Shaher is the founder and CEO of iFin Services. He's also the co-founder of the IFAS group. We know IFAS are doing a phenomenal work across the world from a Sharia advisory development work, working with governments and different institutions, and have done so much over the last couple of decades. And so well done to the team at IFAS. Also, Dr. Shaher has more than 18 years of hands-on experience when it comes to Sharia, compliance, product development. He's worked with over 150 different financial products in Europe, GCC, and Africa. Over 150 products that he's done. Perhaps it's even more. This bio might be outdated by now. And so it's an honor to have him with us. And secondly, I have with me another very dear friend of mine and also an expert in Islamic finance and banking, who's a professional in Islamic banking and finance. He's been in the industry for over 20 years now. His brother Suleman Muhammad, who has worked, again, across the world in GCC, in Asia and other parts, in Pakistan, advising on different levels, working on different products. And so it's an honor and a privilege to have them both. Assalamu alaikum, Dr. Shaher and Brother Suleman.
Wa alaikum assalam wa rahmatullah. It's a pleasure to be with you, Sheikh. Jazakallah khair.
Yeah, so look, let's dive straight in, right? And perhaps I can ask Dr. Shaher first is, how do Islamic banks actually price their products? Like, what is the big deal? What's the question? What's actually happening here?
Ya, assalamu alaikum. Bismillah ar-Rahman ar-Rahim. Wassalatu wassalamu ala Sayyidina Muhammad wa ala alihi wa sahbihi ajma'in. Jazakallah khair, Sheikh, for joining or bringing us into this, interesting, really, podcast. And a very interesting concept and also concept it's keep coming up and again from everybody who actually wants to work in Islamic finance or use Islamic financial products. Now, the reality is Islamic banking or Islamic financial institutions are commercial financial institutions. So they need to price their products very much like any other financial institution in the market. Now, there is different ways of looking into this. First, that's Islamic banks need to compete in the market. So their products need to be priced to be comparative like other financial institutions in the market. For example, if you are selling halal chicken and you want to sell your halal chicken in a market where there is, other butchers and they're selling other maybe conventional or normal halal or non-halal, maybe this concept is very much aligned with the UK Muslims in Europe, for example, where they understand that you will have a halal chicken and non-halal chicken in the same supermarket. They will be sitting on the same shelf or next to each other. Now, if you look at a chicken, halal chicken price and a normal chicken or conventional, let's call it the conventional chicken in terms of the UK concept, you will find that their prices are similar. Might be maybe the halal chicken a little bit more expensive usually. But the question here is, when you look at it, these guys who actually buy and sell the chicken, they are businessmen. They will have the cost of the chicken, they will then add their margin, and then they will be able to price it to be competitive in the market. So Islamic banks works in a similar way. They need to check out their cost of operation, their cost of funding, and then need to price it to be competitive in the market. Now, their prices might be a little bit more or less, depends on the market conditions, but overall, it's a offer, and it's a supply and demand market where the customers, if there is enough supply of Islamic products and enough competition, the prices will typically go down like any other market. But if there is only few banks or financial institutions offering Islamic products, then their prices could be a little bit higher than the average market. Just to make it sure, of course, we have our brother Suleman also with us, who's actually an expert in this area also. We look at this in terms of supply and demand of the market. We look at this depending on the cost of fund, and of course there is more details to that we can come back later. But mainly it's competition. If you have enough competition, if you will need to reduce your prices so your product will become attractive to other people. And if there isn't enough competition, then you have more control of the pricing, and you might be able to pop up your pricing a little bit to be, a little bit, let's say, have higher margin or more profit for the financial institution. So that's the reality of it. Everything is beside that is basically details of how it's actually conducted. So this is I think my view, and back to you and see what Brother Suleman will think about that.
Yeah, Brother Suleman, love to get your thoughts on this, and also give some insights on how actually it works in the back end, which many people don't see.
Yeah, Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. Yes, as Dr. Shaher Abbas has said, he's spot on that thing. Like any industry, so for example, any industry or any institution, they need to first of all look at what their input costs are. And once they look at that their input costs, they look at what the competitive market is there and what is the competition offering as a price. And then only they can price their products. So similarly, for Islamic banks, as Dr. Shaher has also mentioned, there's an input cost. And the input cost is basically the Mudarabah profit rates. For an Islamic bank, it's the Mudarabah profit rates that the Islamic banks are currently paying to their depositors. Or, for example, they have to pay in a foreseeable future, like say in a period of 1 year or 2 year or such time frame. So that is basically the base rate of Islamic banks, or you can say that is basically the base input cost for an Islamic bank. Now, based on that, then there is like an operational cost for Islamic banks as well. For example, the wages, the running of branches, the system expense, the depreciation, everything else. And over and above that, then for example, they have to price the housing finance asset or diminishing musharaka financing. So they would price it based on what the market is offering. So again, as Dr. Shaher has also mentioned, that you don't want to be out of the competition as well, because if you price it too high, then of course you're out of the market. If you price it too low, then you're actually not covering your cost. So it's basically practically what is happening is that it's basically a financial intermediation function where deposits are your inputs, and you have to cover your costs to actually price your products in that sense.
No, Jazakallah khair. And I guess somebody would say, well, if you have 4, 5, 6 banks, then why don't you just create your own rate and your own little market in competition? What would you say to that based on what you just explained?
The basic issue is that, look, the thing is, I'll give you one very good example. First of all, yes, that can happen. And the thing is that, in fact, I was involved in one of this effort, which happened in Pakistan around like 2010, 2011. And we had like basically a congregation of different Islamic banks. Each one was given a task to come up with a suggestion of how we can come up with an Islamic benchmark rate compared to the Kaibor. So in Pakistan, normally they use the rate of Kaibor to finance. And Kaibor, it's basically Karachi Interbank Offered Rate, which is normally used by Islamic banks and banking in general, the banking industry, to price their products. So everyone came up with a suggestion. Some of them came up with the normal suggestions that we normally hear from different people, that we should use the average of rental market rates of housing finance, right? For example, there is a rental property rate going on in the market, so we should use the average of that. Some came up with a suggestion that we should have a basket of goods, a basket of commodities like rice, it can be pulses, cotton, and all these things which are normally traded in the market around Karachi for that. So they suggested that maybe we could have that weighted average rate for that. But in the end, I mean, all these suggestions were not accepted. And primarily the reason was that, I think, first of all, we need to look at what is the market, and what determines pricing in any industry. And this question comes again and again, that why, when Islamic banks are using diminishing musharaka and ijara, which are primarily rental-based contracts. So if they are providing housing finance based on ijara or diminishing musharaka, why they are not using the rental rates which are prevailing in the market? So this is a very common question. And this was in fact one of the suggestions of the bankers as well. So the reason is that why that is not applicable. So we need to realize that for any industry, in any industry, the price determination, or the price is determined based on the supply and demand reality in that industry. For example, the rental yields, or the price, or the value of the rentals, or the rental that is charged in the market, is dependent on the supply of rental units and the demand for rental units. Similarly, the price of rice is always determined based on the demand for rice and the supply of that specific rice. Now, you cannot tell the rice trader to price your rice according to the rental yield in the housing market, because the demand and supply of the rental market does not apply to the rice trader. Similarly, we need to ask this question, that whether the supply and demand situation in the rental property industry, the supply and demand situation of the rental property industry, does it apply to Islamic banking, or does it apply to banking in general? It does not. Because, for example, if I was a real estate company, right? If I was a real estate company, people are coming up to me and putting their property for rental, or I have an inventory of apartments or property to give on rent, then for me, the supply and demand is relevant. Because if the supply is higher and demand is less, what I would do is that I would be willing to lower my price to hold the limited number of customers that are coming to me, because supply is high, demand is lower. Similarly, if demand is higher, as a rental property company, I would be willing to wait and give my property to the highest bidder, because I am there in the market. But for Islamic banks, what happens is that this is not applicable. The supply of property or rental units is not applicable, because first of all, Islamic banks don't hold the inventory of the rental property. So we don't hold the rental property supply. If we hold that, then we have the risk to do that. Similarly, as Dr. Shaher has mentioned, is that for any customer that comes to me, if I don't give him the price, that customer will not go to, if any customer comes to me and requests for housing finance, and if I don't fulfill his price requirement, that customer will not go to a rental property company. In fact, he will go to any other bank, because the product that I'm offering, that is not being offered in the rental property market, which is to provide housing finance for a period of like 20 years, 25 years, where the customer is looking for leasing or renting a house with ultimately ownership, getting the ownership of the asset. So the supply and demand reality of the housing market does not impact me. What impacts me is basically the supply of the funds which is there, with the pricing of the funds, and my customer to whom I have to give based on the housing, the pricing of what the other banks are offering. If I don't offer that, then my customer will go to another bank. So based on this competition and based on this reality, my reality is totally different. My reality is not the housing market, but my reality is the financial intermediation market or the general banking market, which is driven by the supply and demand of liquidity and funds.
Jazakallah khair, that was very insightful. I think it's Dr. Shaher, I'd love to ask and get your thoughts on this. So from a Sharia perspective, how do we justify using the base rate, for instance? And are we not then really treating money as a commodity, which would philosophically go against Islamic principles?
Well, Jazakallah khair, and I would like to, pick up from where Brother Suleman has stopped. The banking market, where Islamic banks are part of that market, depends heavily on the cost of funds, and the cost of funds is usually set up by the central bank. And now, why? I'm not sure how much deep you want us to go into explaining this, but the main function of a central bank is to control inflation. How they control inflation? They control inflation by controlling the supply of money in the country, right? So the way they use, the tools they use to control the supply of money is basically raising the cost of borrowing for banks from the central bank. So this is what they call it, the base interest rate, is how much a bank will cost him to borrow from the central bank. Now, when the central banks wants to limit the ability of the banks to create money in the market, right, and give loans in the market, then what the central bank will do is will increase the base interest rate, which push all the banks to increase their interest rate, meaning that it will become costly for anybody to take a loan, which means people will stop taking loan and stop spending. And by then they control the inflation. This is the standard role of a central bank. The main function basically is to control the inflation through the controlling of supply of money in the country, right? So this is what happens. So for a bank, the main function of a bank is actually to take the money of the depositors and give them to the people who actually wants to have a finance. And in between, which is intermediation, basically. Banking is intermediation. I take money from people and give it to other people, right? And in between, I get my margin, which is the profit I make from the cost of the deposit I take and the cost or the profit I make from providing finance to other people. So technically, the cost of a bank to supply finance or to provide a finance product will depend on two things. First, the cost of the central bank, how much the central bank will put the rate, because the central bank function is actually to increase the cost or reduce the cost based on the market requirement, right? To control the inflation. So that's one part. Plus, how much I'm paying my depositors, right? So these two things, plus my profit margin, how much I want to make money from this operation, then the price will come for the finance product. So this is how it's done in an economic sense, right? From economic point of view. Now, Islamic banks operate within this environment. There is no certain country, maybe we had Iran where they have fully Islamic banking system, but they still, I believe the central bank there, they push actually their base rate, wherever all the other banks have to use the base rate of the central bank. So whether you are working in a fully Islamic country, and inshallah we will see soon Pakistan, inshallah, moving into a fully Islamic operation, Islamic financial system, and then still the central bank of Pakistan will still have to issue the base rate. It still have to do its main function, which is controlling the economy, controlling the inflation through controlling the supply of money. So that will gonna still be the same function that the central bank of Pakistan has to do, but even if everything is Islamic, so the central bank has to set the base rate where the Islamic banks then will use it to create a profit margin. So that's very important to understand what's happening in terms of the economy itself, right? Now, there is differentiation in relation to Islamic banking usually from the conventional sector. And that is, you don't really need to go and get impacted by the central bank Why? Because you will only get to that if you want to borrow money from the others. Okay? But Islamic banks will have the depositors' money. And the cost of the depositors' money, technically speaking, is the cost of funding for the central bank unless they have shortage of money. So there is a lot of demand. They have a lot of demand on the finance product, and the money they have is not enough. So they go and need to get actually finance or get money from other banks or from the central bank. But let's assume simple case. Assuming simple case that I have enough deposit as an Islamic bank to offer my finance product. If that's the case, and usually you will have enough deposits actually to give enough financing, because the control of the financing is actually related to your capital, but you have no control on how much you can get deposit. So usually there is a limit of how much financing you can give as a product, but there is no limit about how much deposit you can get. So you can get enough deposit, like we can see today with Al Rayyan UK. If you've been following for the last few years, Al Rayyan UK is the highest paying bank in the UK on the term deposits, 3 months and with a notice. And that made them, I think there is about 80% of the deposit is from non-Muslim, which means that you as an Islamic bank, you can be on the top of the charts in a country where even the majority are non-Muslim, just because you're pricing your product correctly. So this relationship that Islamic bank is expensive and I cannot get enough business, it's just basically a pricing matter. Right? Islamic banks do not actually know how to price their product properly. And that's why they end up basically with a limited number of customers, limited number of impact in the community. But the minute one of the banks actually decide to give a proper profit rate, we see that the market will all the deposit will come from everywhere, from Muslim, from non-Muslim, because it's the best paying bank in the country. Right? So you can see that impact. Now, I have been looking into this factor for a long time. And one of the things that I would love to do one day is actually to write a theory about the impact of the equilibrium of economy based on the Islamic banking theory, which basically says that if I have enough deposits coming to me on a 3 profit sharing ratio, we say Mudarabah on a 50-50, right? Without a cap, without anything, it just really give the depositors a real share of the Mudarabah profit that the banks will make. So assuming that you have money coming from the depositors at a free 50-50 profit sharing ratio, and then I'm giving my financing based on the cost of funding I have, which is 50% of the profit for the customer, for my depositors. Then technically you're speaking at the beginning of a free loan working Islamic bank, like when we started with the IBB, or now Al Rayyan UK, it was the first Islamic bank operating in the country technically in the UK. Now let's take that as an example. If you're actually able to provide funding at a low cost, because at the beginning the Islamic bank doesn't have a lot of profit, so the profit sharing ratio will be low. Let's say maybe in a normal economy of a 3-4% interest rate, they will be paying 2 or 1% on the profit on the deposits. Now, if you take that and then you give a financing at 5 and 6%, which is the normal in the market, then you will be able actually to gain more profit and pay more on the deposit. Now, if I pay 50% of the profit, which is if I price it at 6, then 50% of the profit could be 3%. Then I am technically paying more, profit on my deposit than anybody else in the country. Then what happens is all the deposit will come to me. If I have more deposit as a bank, because I'm paying the highest rate, then what I will need to do, I need to provide financing. I need to provide more financing. How can I provide more financing? By reducing my cost of financing. So I have to be competitive in the market. I want everybody also to come to me for financing. So I have to reduce my profit rate on the financing from 6 to 5, right? Which means now I am the cheapest on the financing in the country. Then everybody is coming to me. Now, by virtue of everybody coming to me, I'm still making more profit because I'm utilizing more of the deposit now, right? Now, that ultimately, even if we don't look at the central bank, if we take it out from everything else, then the Islamic bank function, by working in this way, will reach an equilibrium which is the cost of funding in the country. Now, that will be automatically providing the cost of funding for everybody. You don't need to interfere with it. You don't need to actually create any new parameters. It should, by definition, according to this theory and this analysis, that Islamic banking should work the market on its own by freedom to reach equilibrium, which is actually educate the cost of funding for everybody. That's how it should work if we just leave it. But unfortunately, we don't. We always try to control the Islamic model, which is the purest model, which is the correct model, which Allah has created for us. We try to control it in a way to look like the conventional. And that's unfortunately the downside of it. But if you think about it purely from economic theory and leave it alone, I think you will reach that. So that's, I think, how, from a Sharia perspective, an economic perspective, you can reach to that cost of funding or pricing that you would expect, right? Without actually need to benchmark it to somebody else or to any central bank. And technically, that function will work better to control the inflation than what the central bank is doing. Because this tools they created is actually based on tools related to interest rate, right? And doesn't work in an Islamic economy, to be honest. It will not work. It never worked with them so far because all the central banks, they're never actually able to control the inflation for a long time. They're always able to control it for a few years, but then it will go out, out of the window like usual, right? The cycle of inflation, the cycle of economic crisis happening every 5 to 10 years. And it's becoming more and more and more often now. And obviously because their system is defaulted. Now, if we take a free Islamic banking system and set it up correctly, it will reach you to the point that actually you will be able to automatically control inflation by creating the right equilibrium cost of funding in the market, which actually achieved by just letting the Islamic finance model work properly in its pure model. I'm sorry if that's maybe a little bit too much, but I think this is from economic and Sharia point of view, this is the only way it will work.
Jazakallah khair. I think that was very insightful. And Brother Suleman, I'd love to get your insights and thoughts. A lot of ideas must have been flowing in your mind when Dr. Shaher was speaking.
Yes, I mean, that's very insightful what Dr. Shaher has said. And the thing is that you asked one question before, and that was like, I mean, if we are talking about like financial intermediation and the pricing of Islamic banks is based on the demand and supply of funds in the banking market or the financial intermediation market, then aren't we commodifying money, or aren't we pricing the money which is actually not acceptable in terms of Sharia? So how are we not doing the same thing which conventional finance or conventional banking has been doing for the centuries, like pricing of money? So I think first of all, we need to understand that pricing of money is basically a term, and it can have different contexts, and we need to understand which context is problematic from Sharia perspective. So for example, like when you go to a conventional bank and conventional bank says that I will give 4% profit rate to you, you deposit $1,000 with me, I will give you 4% per annum return to you. Now, what effectively the conventional bank is saying is that you give me a loan of $1,000 and I will give you 4% return for using that loan or using that money. And the depositor is also effectively saying that okay, I'm giving you my money, I'm giving you my loan, and I will be charging a rent or profit for specifically using that money. What you do with that money, that's not my problem, right? So basically, instead of giving a house on rent or a car on rent or a machinery or any asset on rent, what the customer has done is that he's basically given $1,000 of money to the conventional bank, and for that he's charging a rental or a profit. So that is basically, in other words, he's commoditified the money. Instead of giving an asset, he has directly given the money and charging rent or profit on that thing. And this is what commoditifying of money is actually, that you charge something for the usage of money, when in fact money is only a medium of exchange. You cannot use it as a commodity directly to earn any returns on that. And that is the reason that the Sharia has prohibited gain on loan under a loan contract, which is effectively riba. What riba and nasiya is, basically you charge something over and above the principal amount in a contract of loan. So that is what conventional bank is doing. And that is what is pricing of money, where you commodify the money and charge a rent or earning on that. But that is not what happens when you go to an Islamic bank. When you go to an Islamic bank, the Islamic bank is also says that, okay, I will give you an expected return of 4%. If you deposit $1,000 with me, I will give you 4% return on that. But what effectively Islamic bank is saying is that I have a pool of assets. I have a general pool of assets. In that pool of assets, there is diminishing musharaka housing asset, there is ijara, manufacturing asset, there is Mudarabah working capital asset, there is probably another Mudarabah musharaka, other assets there. And that general pool of asset is basically earning a return of 8%. So 8% is the historic return, and in future we also foresee that the 8% return this pool will earn. And if you deposit $1,000 with us based on the Mudarabah 50-50 ratio, I will give you expected 4% return on that. Now this is very different from what conventional bank is saying. Islamic bank is effectively saying, you don't give me the money. You don't give me the money under the loan. I will not use the money. What you are doing is that you are investing in the general pool of assets, which I am the Mudarabah manager of. So you are investing in that asset, in the pool of asset, and you are getting a return on that, right? But in both cases, what is happening is that both of the banks, in both of these cases, the supply of money or supply of funds is being influenced. It is being influenced in both of these cases. But of course, the way the Islamic banking is doing, it's of course acceptable, because it's like Islamic banks are saying that we are giving you a rate on the invested capital or the Mudarabah invested capital. While conventional bank is actually saying that, okay, I will use your money and give you money back. So that is like what commodifying of money is. And this is, of course, not commodifying of money, because Islamic bank is saying you will get a return on your invested capital in the pool of assets. So in both cases, supply of money is being impacted. Supply of money is being influenced. So if you're talking about pricing of money in the first context, of course, it commodifies money, and it is, of course, not acceptable in terms of Sharia because it uses a loan contract. But in case of Islamic banks, it is through the investment of money. And it is also very common practice in the market as well. You have, for example, $1,000, right? And you want to invest in the equity market. There is a share which is offering a dividend yield of 2%. And there is another share with the same industry, with the same risk return and capital gains profile, that is offering a dividend yield of 7%. Where you will put your $1,000? You will channel or supply your $1,000 to the stock which is offering a 7% dividend yield. So if we are saying that we are pricing money, then pricing of money can mean different things. One context, as I explained, is conventional banking, which is problematic from Sharia perspective. But the other area where the Islamic banks are saying that we will give you an expected return on the underlying pool of assets and attracting funds through that, of course, that is acceptable in terms of Sharia, because if it is backed by Sharia compliant assets. So that is, I think, we need to understand where is the differentiation. Normally, we see that people get triggered by certain terms, that pricing of money, or you are pricing money, it's financial intermediation, so it's the same thing. But again, we have to look at what is the underlying process and the underlying contract and how that is happening.
Yeah, I'm very happy actually you mentioned this, because that's exactly the remarks that were said, right, in the time of the Messenger of Allah sallallahu alaihi wasallam, when Allah revealed the verses innamal bay'u mithlu riba. Like, people are looking at the outcomes, or just like the face value superficially. It all looks the same, but Allah said وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا. Right, the actual mechanics is different. The pricing up here is captured against, or is against, an asset, and that's what changes the entire dynamics, right? As opposed to pure direct money for money. And this is something from a Sharia perspective, I guess people don't really realize. And the concept is, riba happens in a contract. Riba is not just this idea which floats around. Riba is captured in a contract. And how is it captured? when there's an exchange and there's an excess in that exchange. There is no riba in tabarru'at. So in contracts which of donation or gratuitous contracts where there's no exchange, there can be no riba. In fact, if you have a loan contract with riba, the scholars mention that actually becomes a riba contract. It's no longer even a loan. So people need to understand that riba exists within a contract. I always like to give this example just to make things easier for people. From a Sharia perspective, the world of mu'amalat and finance is what is in the contract. You have to look at the world from the contractual lens, not from what your eyes see.
Yes.
Right? The world in a financial product, it's what's in the contract. So if there is no riba in the contract, then there can be no riba. Even though you might be seeing a reference here, base rate or this rate or whatever. But the contract is saying you're paying X amount for this property and they've priced it in this particular way. That price is against the asset. That's the real world as far as Sharia is concerned. That contract that you've agreed, it's not what your eyes or minds are thinking, because we're thinking of outcomes and all these things. But this is the key idea and principle from a Sharia perspective, why this thing is not riba. And riba only manifests when you're exchanging money for money or homogeneous items, right? And you have an excess and surplus in that exchange. So the question of riba doesn't even really apply here, because riba is not an abstract concept. And this, I guess, many people, sometimes they try to abstract riba to like lengths and depths, right? Which sometimes becomes completely disconnected from what the Sharia says riba actually is. And then you go into this complete gray area and like this, this world which anything rides. Dr. Shaher, I'd love to get some of your final thoughts here. What would you like to say on these points, and any further thoughts have come in your mind while Brother Suleman and I have been discussing?
Yeah, no, I agree totally with you. I think there is a lot of confusion in the market about, how should an Islamic bank price their product, and what is okay and what's not okay. And a lot of people get confused about, because they are comparing it to conventional banks, or they are using the same way as a conventional bank. And Brother Suleiman know better, when you design a product, when you look at a product from an Islamic point of view or from an Islamic banking perspective, you need to design the product in a way that actually meet the requirement of the customer. So, for example, you want to buy a car. When you cannot go and buy the car cash if it's it's a completely new car. Some people have the ability, but the majority of people, they want to get it financed. So what do? You need to go to the bank, apply and obtain finance, and then pay an installment. So your objective is to buy the car, but pay an installment. And this is how an Islamic bank has to provide the product to you. I cannot tell you I'm going to provide it to you, but you have to pay now full amount in one go, right? It has to be in installments the same way. So utilizing or consuming the Islamic financial product from the customer point of view as a consumption is very much like, you do it for a conventional. You go, you sign an application, get approved, and then you get the car, and then you pay an installment. It's the same thing. It happens when you go to do an Islamic product. The only difference is actually in the contract, as you mentioned. The contract there is a loan contract where you have to pay riba in the conventional, while the Islamic one could be Mudarabah or Ijara. The bank will have to buy the car, own it, and then sell it to the customer, and the customer will then pay the price in installment. Now, this is the reality. The difference is in the contract. Now, another example which I usually use when we give some training to the bankers, in the Islamic bank, they say, assuming that there is a factory who's actually creating grape juice, yeah, and there is alcohol factory, right? Now, both of them will have to buy grape. So the cost of the grape itself from the market is the same. Both of them, they have to process the grape. One, of course, is going to do it alcohol and going to do it haram, and then he will put a margin on that. Let's say they put 10% margin on their product or alcohol. And the halal grape juice one, they will put also 10% on the market. And then you sell it. You cannot come to me as a grape, I'm selling grape juice, and you tell me, why did you put 10% on the market like the alcohol one? Nobody asked this question. And really in the market, nobody asks you a question. Why are you pricing your product, which is halal product, the same way as alcohol product. Nobody asking this question. But when it comes to Islamic banking, everybody asking the same question. Why you price your product like the conventional one? It has nothing to do with it. The fact that we are in the same market, the fact that we are doing similar things, but this is halal and this is haram. The pricing mechanism of how I want to price is about competition in the market. It's not about this is halal or haram. I just need to be able to compete in the market like anything else. I want to offer my product in the same way like every other bank's offering in the market. So I have to be competitive, comparative in the market. People has to see my product, compare it with the other ones. I cannot be more expensive. I cannot be much cheaper because nobody will trust the product, right? So imagine you are selling your chicken when the market, everybody in the market selling the chicken at £5 a kilo, and then you go and sell it for £1. Nobody will buy it from you. They say this is something wrong with your chicken, right? This is what everybody saying. Why is it so cheap, right? And it cannot be so expensive. They say, what this guy is thinking? Why are you selling it for £10? Everybody is selling in the market in £5, right? So people will compare always, and they will compare the Islamic products, the conventional product, because it is the market. People will go and check the conventional banking mortgage and then go and ask for the Islamic. Now, yes, some Islamic products are more expensive. Some are equal. Some are cheaper now. As we're growing and the Islamic banking is growing, there is a lot of banking, offering very competitive products, pricing. And some are actually providing cheaper product. And as we mentioned, Rayyan UK is actually putting a higher price also on the deposit, on the profit, on paying higher profit than everybody in the UK, which is telling you the story. It can happen. Islamic banks can provide better pricing, can provide better services, inshallah, for everybody. It just needs some time, inshallah, for them to do that.
Jazakallah khairan. Brother Suleman, final words from yourself.
Final words. So yeah. So just one example. If for example, the rental yield example, because most of these questions come from the housing finance. Normally, it doesn't come from the corporate banking perspective. For example, rental yields are, for example, in the market, the rental housing yields are 7%, right? And banking industry is providing housing finance on 5%. Now, one Islamic bank says that, okay, my product is diminishing musharaka, so I will price it at 7% of the rental market yield. What will happen? Nobody will come to this Islamic bank. Similarly, we flip the example. For example, the rental market yields are 5%, and Islamic banks are giving financing on the basis of 7%. All the conventional banks and the banking industry is giving financing on the basis of 7%. So, and now this Islamic bank thinks that, okay, what I will do is that since it is diminishing musharaka, I will price my diminishing musharaka 20 years mortgage finance at 5% rental yield or profit. Now, what will happen is that this Islamic bank, there will be a long queue outside the branches of this bank. Everyone would want housing finance from this bank. Ultimately, this bank will have to turn away many of its customers. But at the same time, what will happen is that since this Islamic bank is pricing its asset at 5%, even if you take like 50% deposit ratio, this Islamic bank will only be giving deposits of profit rate of on an average of 2.5% to its depositors. While compared to that other Islamic bank, since they are pricing at 7%, because every Islamic bank it's a small part of a market. Any Islamic bank doesn't control the market as a monopoly. So if the other Islamic banks are pricing at 7%, those will be giving an average deposit profit rate of 3.5%. So my depositors as an Islamic bank who are getting now 2.5% will go away. There will be a deposit attrition from my balance sheet in favor of other Islamic banks or even conventional banks, right? So what will happen is that I would be short of funds, and to fund my book again. I mean, if I am liquidity short, I won't be able to fund new customers. Even there can be a bank run on my deposits. I would have to sell my assets until I get the new funds from the market. To attract the new funds, again, I cannot attract those funds at 2.5%. I would have to increase the rate. So I would increase the rate up to the point, till which point I will increase the rate. I will increase the rate up to the market equilibrium level to achieve that, which is 3.5%. To achieve that 3.5%, again, I have to increase my asset pricing up to the market equilibrium of 7%. So the thing is that things don't work in isolation. It's easy to say that, okay, why you just don't market or price your diminishing musharaka 20-year mortgage product at the rental yield. So the thing is, the customer is different, the product is different, and things don't work in isolation. If I do that, I have to take care of my deposits. If I have to take care of my deposits, I have to increase my asset side. So this is basically how things practically work. And secondly, I think I was telling one story regarding the Pakistani market where we tried to do that. I don't know, it got lost somewhere. So the thing is that finally, so everyone gave its suggestions. When one suggestion was, in fact, two, three banks suggested that it should be, what we should do is that we should have a Mudarabah interbank offered rate actually. And Mudarabah interbank offered rate would work this way, that though there were like 5 Islamic banks at that time in the Pakistani market. So it was suggested that all the Islamic banks at 9 o'clock, I think, 9 o'clock Pakistan time, they would basically quote their Mudarabah profit rates for taking on 100 million rupee deposit. So they would basically go into the market. They would announce in the market that for 100 million deposits, PKR deposits that we take, we will give a expected profit rate of, for example, 3%. So each of the bank, 1%, one bank would quote 3%. Similarly, all the 5 banks would quote that rate, and the average of that rate at 9 o'clock Pakistan time would be the Mudarabah interbank offered rate. So that can be an overnight rate, there can be a 3 months rate offered rate, a 6 month offered rate. So they would quote the rates for different terms, and the average of that rate would be for example, that would be you can say an average Mudarabah interbank offered rate in Karachi, and that would be basically the benchmark, and we can basically initiate the benchmark in this manner. So there were various discussions. Everyone accepted actually this solution. All the banks, all the treasurers, all the product development people, all the CEOs actually accepted this thing. And of course, it was discussed at different forums, but somehow it wasn't launched. And primarily the reason was, as Dr. Shaher has also mentioned, primarily the reason was that the Islamic banking market compared to conventional banking was very small. So it was seen as that even if we launched that Mudarabah interbank offered rate, it would effectively, there would come a point that it would become exactly the same as the prevailing KIBOR rate, which is the conventional benchmark, because each bank, Islamic and conventional bank, is actually competing with themselves, with each other. So ultimately, the pricing of that benchmark would also be exactly the same as KIBOR. Anyway, that was like around like 16 years ago, and I think as the things are happening there, and if more market is growing and there's a full conversion planned there after some time, so I think now the time is right for in that market also to start the Mudarabah interbank offered rate by the market participants. So I feel that this solution would be the ideal solution because it reflects the pricing, the supply and demand reality of the Islamic banking or the banking market, and that is relevant.
So, Jazakallah khair, and it's phenomenal listening to both of you from your different experiences and insights to really, I think, thoroughly answer this particular question. And this is probably one of the best resources I now that we have, where both of yourselves giving 40, 50 years, like half a century of like brain power intelligence on this topic, laid out in 50 minutes in a very succinct and very coherent way. So I'd like to say Jazakallah khair to both of you for attending. It's been a pleasure and honor to have you on this podcast. And to the listeners, Jazakallah khair for viewing this, and please do subscribe to the channel, and we look forward to seeing you again with more scholars. Jazakallah khair. Assalamu alaikum.
Jazakumullah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum assalam. Jazakallah khair.
Jazakallah khair. Salam.